Hi guys, welcome to this Money Control live stream. A brand new week, and of course, we are poised to start this week on the back foot, given the fact that the GIFT Nifty is hinting at a weakish start for the Indian market. Although we have very strong cues coming out of Wall Street, but cues across Asia are not looking all that encouraging this morning. China's stimulus underwhelming, and of course, the inflation data that came out for the month of October has missed estimates. So Asian markets reacting to that, and of course our markets will be reacting to the GIFT Nifty. The kind of cues that are coming out of there. That's a weakish negative start this morning. Of course, we saw some bit of a relief rally coming in last week on Wednesday. In fact, when Trump staged a victory or defeated Kamala Harris, we saw the Trump trade play out on the Lal Street as well. But most experts were saying that it was a technical bounce, and the focus will remain on the second quarter earnings that are trickling in that have been disappointing, to say the least. So yes, lots to react to today as well. Earnings from Tata Motors, Asian Paints will be in focus. We have some big ticket earnings today as well, the likes of ONGC, Britannia. So lots to talk about over the next 30 to 35 minutes. And of course, we'll be also getting all your stock related queries answered by our experts on the show. So if you have any queries, keep them coming in on our live feed. But of course, before we move any further, let's take a look at the top headlines at this hour. Post-election rally continues on Wall Street. The Dow topples the 44,000 mark for the first time. S&P 500 also closes at record high, wrapping up its best week in a year. Asian markets trade lower after China reports lower than expected inflation for the month of October. The GIFT Nifty is implying a weak start for the Indian market. Brent crude slips to $73 a barrel, driven by easing concerns over prolonged supply disruptions from Hurricane Rafael in the US. Meanwhile, gold logs its biggest weekly decline in over 5 months on dollar strength. And on the earnings front, Tata Motors' second quarter earnings came in below street estimates, while Asian Paints reported a poor set of numbers with volume growth taking a sharp knock. And in key earnings today, watch out for the numbers from the likes of ONGC, Britannia as well as Hindalco. And talking about the cues for trade, of course, we saw the market falling nearly 1% last week. We did see a technical bounce in the middle of the week, but that kind of fizzled out, and the market in fact on Friday ended lower for a second straight session. Except IT and PSU banks that have been doing well, all sectoral indices saw losses last week. Of course, remember we saw a 3.5% kind of an uptick on the Nifty IT index on the day the US election, counting took place, and of course Trump emerging as victorious, vis-a-vis Kamala Harris. So, IT stocks were of course reacting to that, which is why they outperformed last week. If you look at some of the stocks, Trent, Coal India, Hindalco, these were some of the top laggards on the index last week. And for on the other end, you had stocks like Apollo Hospital, M&M, and Tech Mahindra. These were among the top gainers for the week. SBI, of course, reported numbers on Friday, post which it saw a 2% cut. The Nifty PSU Bank as well was down 2% on Friday. And China's stimulus commentary, failed to aid metal stocks. Once again, the stimulus announcements, proved to be underwhelming, and of course, metals reacting to that. If you look at the put call ratio on the Nifty, that increased to 0.91 marginally from 0.90 in the previous session. Stocks in F&O band, Manappuram Finance, that's the new entrant. And aside of that, you have Aditya Birla Fashion and Granules India. These two stocks will continue to remain in the F&O band. No exits from the F&O band list for today. Foreign investors, who have, pulled out over 20,000 crore rupees in the month of November itself, pulled out somewhere around 3,400 crore rupees in the cash markets on Friday. And the domestic investors continue to provide support. They bought shares to the tune of 1,750 crore rupees in the cash market. But of course, to understand the texture of the market and where we are headed this week, I'm joined by Ajit Mishra, who's the Senior VP Research at Religare Broking. Ajit, as usual, great to have you on the show. Want to understand, till now, last week, of course, we saw a technical bounce. It kind of faded. We saw the Nifty again, going southwards. Friday it managed to hold on to that 24,100 mark. But this week, would you believe that the Nifty has the capacity to defend lower levels, 24,000 on the downside?
Yeah, good morning, Nandita. So thank you for having me. Yes, it's been almost like 2 weeks of struggle that we have been seeing this index hovering in 24,000, 24,500 marks. So we made attempt on both sides means, but on the closing basis, we are still trying to hold these levels. Uh, this week is going to be critical because we are in the last leg of the earnings season. FIs they have sold roughly around 1,45,000 crores so far. So we have to see whether this continues or not. Among the two key sectors, basically, Nandita, which I'm keeping a close eye on, one is IT. So IT has, last week shown tremendous resilience that it recouped the losses a week before and ended on a strong note. Banking, I was hoping that that could provide some, relief also, and that would help the market to surpass this 24,500 mark. But as of now, the way private banking majors again they are witnessing a bit of a profit taking, and we are seeing a mixed trend. Near-term outlook still looks sideways to us, at least positionally for the Nifty index. So in the interim, the focus should be more on the theme sectors, wherein we are seeing outperformance. So IT, PSU banking, select private banking majors. Then we have select stocks from the auto and pharma space as well. So that is how one should align the positions on the long side. At the same time, since the texture of the market is still negative, maintaining few shorts are equally important until we decisively reclaim 24,500.
Okay, 24,500 remains a crucial level. Time to be theme and stock specific as well. But let's talk about the Nifty Bank Index. You mentioned that select private banks have come under profit taking, a bout of profit taking once again. The Nifty Bank Index, at least in the pre-open, is hinting at a very quiet, start with a positive bias in contrast with what the market is looking like. But 51,500, that has been maintained as of now. So on the higher side, would you expect 51,800, 700 kind of levels for today and for the PSU banking lot as well? Whenever we've seen the market stage a technical bounce, PSU banks have been doing well. So here on, do you think PSU banks deserve more weightage right now?
So banking, like I said, honestly, I was looking for a break last week itself from the broader range that we have been trading in, 50,500 to 50,600 mark. We've almost there, at the beginning of the middle of the week, but in the last three sessions, we saw that the move again fizzled out. So this indicates that banking also might continue to remain in a range, at least for a time being now. PSUs, they are definitely outperforming, and the select names like Bank of Baroda, SBI, Indian Bank, they have done exceptionally well, and then it should, aligned, your position should be aligned to what we are seeing, irrespective of the sector. So, PSUs alongside with select private banking majors like HDFC, wherein we are still seeing resilience, is something that one should continue with. So index is still a range, but stock specific, yes. Majority of the position, as you can say that, especially from the PSU basket and select large cap names from the private banking space, buying opportunities are more lucrative.
Okay, but given the fact that SBI reported numbers on Friday, I just want to take you through some of the brokerage views there. Jeffries has a buy rating. Target price has been raised to 1,030 vis-a-vis 1,000 that it had earlier, and it remains a top pick for Jeffries. And uptick in deposit growth on a quarter-on-quarter basis, has been a key positive according to Jeffries. And of course, the asset quality also remains pristine. The margin pressure has been there, as has been the case for other banks as well. So here on for SBI in particular, 846, that's the kind of level I can see on the screen right now. But 900 in the coming days, perhaps in the next 4 to 5 sessions, could that be a possibility? And what should one really do with the stock post earnings?
So certainly, yes, the possibility of retesting its record high around 900 plus zone is looks more prudent, and since we have formed a very strong base around 800 mark in the last 4 5 weeks, and then we saw this recovery. So yes, one should definitely stay put, and as like what we've shared earlier, also that within the PSU basket, SBI, Bank of Baroda, they are the top two names because if you consider the overall relative performance also within the sector, they are trading closer to their record high. So that is something that one should be focusing on, especially when the market is indicating a negative structure overall. So within the sector, otherwise also both these names definitely can be on your buying list. For SBI now 800 is a very strong base, so that should be the stop loss, and 910, 920 positionally should be your target zone.
All right, that's the view on SBI. But let's talk about Divis Lab as well. The company has reported very strong set of numbers. Profits have risen over 46% on a YY basis. Revenues have also risen in excess of 20%, and margins have also come in at 30.6% vis-a-vis expectations of somewhere around 30% or thereabouts. Stock performance has been extremely good over the last 6 months, but last 1 month it seems to have given up some of the momentum. So here on 6,155 is where it's at, which is just 170 odd rupees, from or 100 odd rupees, 120 odd rupees from its 52-week highs. Post earnings, do you see a possibility of that happening, and do you expect the stock to regain momentum here on?
So it seems quite possible considering that again within the pharma space, Divis Lab is outrightly a clear outperformer and is still holding around its record highs, witnessing marginal profit taking or normal consolidation. So I feel that until we break this mark 5650 decisively, the trend is not going to reverse, and upside is open since we are it might take a breather around 6200 mark, which is the previous record highs, but upside is open. So keep on trailing your stop losses on every rise, and for fresh buying also. In fact, even the current levels, 5650 should be your stop.
Okay, 5650 stop loss for Divis Lab. But with that, we have the opening bell right here. Let's see how the markets have really opened up. It is a weak start. In fact, we are looking at 24,000 on the downside right now, just about clutching on to that 24,000 level as we speak, and it's about to be broken. It's a 140 point downside on the Nifty, the Sensex as well, just about 450 points down. Mid cap index, the cuts are deeper there. You can see a 1% cut coming in on the Nifty mid cap index. The bank Nifty also has given up that 51,500 mark, 51,300 or so. That's where it's at. I want to see what the other sectors are really doing at the current juncture. You have autos, you have IT, all of these sectors are in the red. IT, of course, was the outperformer last week. But in a spot of bother today, we are seeing some bit of profit taking there. The pharma pack is holding on in the green, 0.5% uptick coming in on the pharma pack. Aside of that, most of the sectors are trading in the red as was expected. And the Nifty small cap index as well down about 0.3% or thereabouts. Let's take a look at the individual movers then and see which are the stocks that are emerging as the top losers. No points for guessing. It's Asian Paints that's down 7% on the back of utter disappointment when it comes to the volume growth. Street was anticipating a 5 to 6% kind of a growth when it comes to volumes, but it saw a degrowth of 0.5%, and that's come in as a major disappointment. So Asian Paints top laggard, 7.5% down as we speak. Shriram Finance, Axis Bank, HDFC Life, these are some of the other laggards. Financial space, of course. And if you look at ONGC ahead of numbers, this stock is also trading in the red. IndusInd Bank, Reliance Industries, Adani Ports, Hindalco, Bharat Electronics, these are some of the other laggards. Even the Bajaj twins, Bajaj Finance and Bajaj Finserv are in the red. On the other hand, Maruti Suzuki, that's the top gainer. Almost a 1.5% kind of gain coming in a weak market. Some of the tech names like HCL Tech, Infosys continue to trade in the green. So although the IT pack is trading in the red, some of these stocks are managing to hold fort. Trent, that has seen a massive downtick after its numbers. has managed to limp back 0.2% kind of gain coming in on trend. HDFC Bank is doing well today. SBI in the green, and so is Kotak Mahindra Bank. So select banking names, select auto names, even Tata Motors for that matter. I want to point out numbers have been underwhelming, but the outlook has been fairly buoyant, and which is why I think the stock is trading in the red. But before I talk about other stocks, Asian Paints, I want your thoughts on this particular stock. Ajit, 2565 is where it's at. It has shaved off 7.5% post earnings. Where do you think the stock will find support?
So, Nanda, it's almost like 3 years now that the stock has been hovering in this broader range, and currently we are, trading the at the lower end of this range. So, this current levels close to around 2500 is what the last time when we saw the stock witnessing a bounce in the month of June 2022. So that is critical to hold in case if we have to see any recovery or a bounce. The stock definitely looks oversold. So for fresh shorting, I won't recommend those who are having longs by any chance. 2500 on the closing basis should be a stop loss. And in case of recovery, 2750, 2800 will be the area of resistance. So around that area, one should look to reduce your position if it's a trading bet.
Okay, that's the view on an Asian Paints, but Tata Motors is the other one. The stock has been an underperformer, has been bleeding. If you look at the monthly charts, 3-month charts, 6-month charts, but numbers have also been underwhelming, as I pointed out. All below estimates. But the fact that the company has maintained its JLR guidance and reiterated that it will be net debt free this year. That's something that may have found favor because the stock is holding out in the green even though the market is weak. Tata Motors, how is it poised on the charts now?
So yes, within the auto space, Tata Motors has been underperforming for almost 2-3 months now, and despite the oversold position, we are not seeing any decisive or sustained rebound. But since we have very strong support around 780-85 zone, and today we have made a low around 792, and then we are seeing this recovery. We expect like some bounce, some recovery towards the zone around 830, 835, but that's a strong resistance which the stock has been holding in a short-term moving average resistance. So once we cross 835, then this bias might turn from negative to sideways, and we may see some further recovery towards, let's say, around 860 to 900 zone also. So as of now, if you have any existing position, you may stay put with 780 as a closing stop loss. But for fresh buying, one should wait for a breakout above 835.
Okay, that's the view for fresh buying. Wait for a breakout about 835 on Tata Motors. Let's take up some of the viewer queries then on that note that are trickling in this morning. Hindalco, of course, reports its numbers later today. We have Pooja, who's written in, and she has a query on Hindalco. She's holding Hindalco at the rate of 685. She wants to know if she should exit or whether she should hold on to it or whether she should add more to it right now, average so to say. So 685 is a buy price and 645 is where the stock is right now. Making a bit of a loss here. Would you advise averaging?
So averaging not at current levels, Nanda, considering that the market tone is negative and we are seeing extreme volatility within the metal space also. So post Novelis numbers, we have seen this decline. The stock was trading strong before that, and after this decline, we are again trading closer to its long-term averages, which is placed around this current area, which is 640-45 zone. So on the closing basis, it should hold 640 mark. So that should be your closing stop loss if you have any existing position, and use any recovery towards 670-75 zone to reduce your position, because near-term outlook looks sideways to us, especially after this recent decline, because the texture that we were seeing, it's been maintaining for quite some time. That has disturbed after this sharp decline last week. So reduce your position on rise is something that we recommend, and meanwhile maintain a closing stop loss at 640 as well.
Okay, that's the view, that's the advice. Hope it helped you, Pooja. The next query is coming in from Satya CK. He wants your thoughts on a Jamna Auto, whether he should average, hold or switch. He's sitting on a 20% loss at present. Of course, This stock of course, is stuck in a downtrend. All the long-term charts that I can see, it has not really managed to stage any kind of a rebound. Jamna Auto, if somebody is making such a huge loss on it, would you advise them to book their loss or wait for some kind of reversal?
So, Nanta, it's been almost in a broader range for 2 years now. That though it made an attempt of breakout, in the middle of the year, but again after the failed attempt, we are again seeing some consolidation and profit taking coming in. So the good part is that this 100, zone is something that it has already tested, and that was the neckline area of the previous consolidation range, pattern handle. So we may see some bounce and recovery towards 100 zone. So with stop at 105, you can stay put and use this recovery to reduce your position. So around 120 area, definitely you can look to reduce. And for existing position, do maintain stop at 105 as well.
Okay, that's the view, Satya. Hope that answers your query. But I want to take up the next query. This one was on ITC. Hemant wants your thoughts on this stock. The stock has lost steam, really. In the last 3 months, 1 month, if you look at the stock, it has been fairly sideways. Any possibility of some bit of regaining momentum here, because it's below that 500 level and it has been there for some time. 529 or so has been the 52-week high on this stock. But do you think it has fallen back into that whole range bound kind of a trend, or do you see some possibility of this stock once again gaining momentum and reclaiming that 500 level?
So that's right that we are seeing correction in ITC also, but if you compare it with the other FMCG counters, though it's not completely an FMCG counter per se, but still the performance is comparatively much better to what we have witnessed in HUL, Colgate, Dabur in the recent weeks. So I feel that it's comparatively stronger as a structure also, and 470 is where we have multiple supports on different time frames. So that should be a stop loss for the existing position. For any fresh momentum, we need a close or a breakout above 485 mark. So once we reclaim that mark, then there's a possibility that the stock might inch toward 500 or maybe higher. So as of now, you can stay put with 470 as a closing stop loss.
Okay, keep 470 as a closing stop loss on ITC. But let's also talk about some of these companies, white good companies like Whirlpool. Reported numbers, profits jumped 40% on a YY basis. Revenue also grew in double digits, 12.5% or so. Margins have expanded to over 5% from 4.8% in the same quarter last year. I think the stock is under some kind of pressure today, 4% down as we speak. Last 5 days, we saw the stock attempting to make some kind of recovery after seeing a 10 to 15 to 16% kind of correction in the last 1 month or so. Do you think these feeble attempts at recovery are unsustainable now? Because although numbers are looking good on the face of it, the stock is down 4%. The weakness continues.
So, Nanda, yes, the move was almost vertical last year when we saw the stock moved up from 1200 to 2400, and it's kind of like it has already discounted the positives that we have in the stock in the prices. So that's why we are seeing this profit taking continuing, despite the positive numbers. And this decline may extend further if it breaks 1950 mark. So from the trading point of view, that should be a strict stop loss, because otherwise the stock might inch toward 1800 to 1820 zone in the next leg of the down move. So be strict with your stop losses at 1950 for Whirlpool, and use recovery toward, let's say, 2100, 2150 mark also to reduce your position.
Okay, Whirlpool, that's the call. What about Vijaya Diagnostic? I think there's a query coming in from Pawan Rajesh on this stock, and he wants to know if it warrants an entry at current levels. The stock saw a very good up move in the last 5 sessions. We've seen 15% kind of gains monthly as well. Stock has done well. Last 6 months, we've seen almost a 50% kind of an up move. Would you advise waiting for some bit of cool off before entering, or would you say that 1100 levels are okay for an entry point?
So, see, it's outperforming big time to what we are seeing in the mid cap and small cap space, and the stock has reclaimed the record high also with very strong volume in the last trading session. So, but as you have rightly mentioned, that the move was almost vertical from 875 to 1100 plus zone. So, it might witness some consolidation or profit taking first before making further recovery. So 1070-75 is the area basically where one can look to go long with the 1025 as a stop, and positionally 1300 plus something is one can maintain as a target zone. So yes, still a buy on dip candidate with the 1020 as a stop loss.
Okay, couple of more queries to go then. Shakti Pumps, that's the next one that's coming in from Kishore. He is not looking at it from a trading perspective, but from an investment perspective. The stock is down 2.5%. Last 1 month as well, the stock has shed somewhere around 8 to 8.5%. And the last week, we did see that the stock was attempting to make some kind of recovery. Any kind of particular trend that you're spotting here? It's at 4,550, still 500-600 rupees away from its 52-week highs.
So, since his view is long term, definitely he can stay put. But since, we are seeing pressure in the mid cap and small cap space also in line with what we are seeing in the index, so it might remain in a range. And since the stock witnesses comparatively lesser volumes, so it's good as long as we are not seeing any sign of a rise in the volume. So that might result in sharp decline. Maybe once people might try to exit their longs to save their existing weaker position. So as of now, definitely he can stay put.
Okay, that's the view on a Shakti Pumps. Just one query to go then. Utsav Jain wants to know your thoughts on a Zomato. And we also have another person, Nanda Reddy, wanting to know about Zomato. Utsav actually holds the shares for 274 rupees. He wants to know if there is any hopes of a reversal to reach levels of 300 on a Zomato. Of course, Zomato hasn't really been able to clock that 300 level yet, but the stock has been witnessing profit taking, and of course, this week we also have Swiggy making its debut on the Lal Street. So, how are the charts really? What kind of signals are you getting from the charts of a Zomato now?
So it's still trying to hold the key areas. So 240 is basically the zone where we have multiple supports, and then we have next major support at 230 mark. So yes, until we break that mark, the trend is not going to be on a negative side, but the texture from earlier that we were seeing a decisive and clear momentum that has shifted to largely sideways, but with a positive bias. So you can maintain your longs and wait for a closing above, let's say, 260 mark to reclaim some momentum and inch towards the new high, which is 290 plus zone. So as of now, you can definitely maintain your longs, and 230 is the area basically where we have major supports.
Okay, major support at 230 level. But this wraps up our query segment for today. For those whose queries we couldn't take, please don't get disheartened. We'll try and take them up tomorrow. But Ajit, before I let you go, what would you be keeping on your radar in terms of stock picks for today?
So Nandita, like IT, what we have discussed earlier, also being the strongest bet that we have at present, and HCL Tech is something that we have recommended to our clients also. The stock is trading closer to its record high, and we expect this momentum to sustain further, and this outperformance also to continue. Once the market is going to resume the uptrend. So as per the range, 1910 is something that we are eyeing, and 1795 should be your stop loss for the long trades. And since the Nifty structure is still negative, certain stocks on the short side is something also that as a trader you should maintain. And Coal India is offering you such opportunity. So the stock has been struggling below its major averages for almost 2 weeks now. and it seems like next leg of the downtrend is ready. So 420 is currently quoting in spot markets. So with stop at 435, one can go short in Coal India with 390 as a positional target.
All right, HCL Tech on the long side and Coal India shorting candidate. These are the recommendations coming in from Ajit. With that, Ajit, always a pleasure chatting with you. Thanks a lot for taking out time and joining in and sharing your thoughts with us this morning.
Thank you, Nandita. Thank you. Thanks a lot.
Well, with that, just want to point out what the markets are doing. In fact, the Nifty Bank Index has edged back into the green. In fact, even the Nifty, after breaking below the 24,000 level, has staged a very good recovery from opening lows. And we are just about, looking at breaking into the green territory once again. 24,137 is where the Nifty is at, just about 12 points lower. So we started the day, with losses of somewhere around, triple digit kind of a loss, 100, 120 points. But now we have managed to claw back from those opening lows and just about looking to break into the green as we speak. But of course, on that note, let me also bring on board our next guest for today. Joining me is Prakash Diwan. Prakash, great to have you on the show here, talking to you after a long, long time. And a lot really has happened since then. First, we have that U.S. election verdict, and
Yeah,
we did react pretty positively to that. But experts did point out that it was a technical bounce because focus is on earnings, right? That have disappointed largely, so to say. But just going through that Jeffries report, where they have said that they've lowered their estimates for 63% out of the 121 companies that is under their coverage, and this is the steepest downgrade since 2020. What are your thoughts on that? Is it that dire, the situation?
good morning. So yeah, the situation definitely is not great. Uh, and there was this anticipation that some of the companies could probably manage to get through with this scrappy phase where demand has been subdued. Especially, it's not just consumption in India, but globally also. If you see, there's not much of a sign of a restocking, whether it's textiles, whether it's chemicals, machinery, engineering. So I think overall, the market, the demand situation does make you believe that things could probably continue for some more time in a softer, subdued manner on the earnings front. But within India, the resilience that we carry, that is something which I'm very confident on. The US might take a few months, and not just a few weeks, but a few months to kind of stabilize in terms of where it's headed after the new announcements come through. And there could possibly be some sort of a preparedness of a hard landing that could also come through, which means that if the US market kind of slows down or sees a little bit of a shock, you will have emerging markets also getting impacted, right? So we need to get geared up for that. Earnings will probably take time to revive. Maybe, it'll probably early 2025, 26, financial year 26, where things could start looking up. But till then, it's going to be more of a hum and haw kind of a thing, which is good for investors who want to buy yet. So that's the opportunity they'll get.
What about IT? IT has been doing well last 2 3 sessions. In fact, last week we saw IT emerge as an outperformer. Post earnings, we
Yeah.
saw correction, right, in IT stocks. Here on, have your thoughts changed on IT stocks? What could really change here on with the change in administration in the US?
Yeah, so that's an interesting pocket that will get impacted before other things get impacted. Given the fact that there is an anticipation of a tax cut for corporations, it's quite likely that the earnings, I mean the savings that you have from taxation could probably flow into higher increase in order books. Now, whether that happens early Jan, Feb, or in that first quarter of 25, I really don't know, but it's too early to take a call on how IT will get impacted because it's at a stage where if favorable developments don't happen, you'll probably actually lose ground because they're priced to perfection in that sense. There's nothing left in terms of valuations going ahead that things could kind of change dramatically. So I would be a bit wary of allocating more to IT till at least about end Jan or early Feb. That's when all your TCVs and all numbers will come through and it'll be clarity. But yes, it could look up, especially digitization and people who are involved in the AI side of the business. There could be a lot of work coming through, I'm sure.
Right, I want to break it down to individual stocks. And Tata Motors, the numbers weren't really very overwhelming. In fact, it's underwhelming, so to say. But the outlook has
Yeah.
been fairly, strong. They have also maintained their JLR guidance. So, would you overlook factors like slowdown in PV and CV sales when it comes to India business? And would you focus more on the fact that they have maintained their JLR guidance and they've reiterated the fact that they are going to turn net debt free this year itself? How would your outlook really change on Tata Motors, or would you say that the kind of bounce that it is witnessing today after the underperformance is just a one-off?
No, no, I don't think this is one-off. This is a very clear indication that smart money realizes that last year, when it touched about 1100, or early this year, I don't remember the exact phase, but when it touched the peak, the management came up with a guidance that was very cautioning. They actually cautioned for a little bit of a slowdown ahead, and that's panned out. Now, thanks to those developments, the stock has lost about 33% from peaks. At this level, the management sounds very confident that things could look up, and they've actually maintained the full year guidance, which means that the second half is going to play a big catch up. And if that happens, you'll probably see that getting reflected in the stock. Secondly, they've also talked about the balance sheet becoming much more stronger, net debt free this year itself, which makes them extremely resilient for any kind of potential shocks in the system. So while a lot of the auto companies are talking about expanding the balance sheet and doing things which will be required to pursue growth, Tata Motors is actually going into that debt-free status, which is amazing. And the third thing is the CV business, the domestic CV business could start getting, there could be moves to hive that off as a separate unit. And that is a big drag right now on the PV side. So with a lot of new launches on the EV side, there's a lot that's probably happening in terms of the charging infrastructure, which has been an inhibiting factor right now. Things could probably look up very well for them. So here's a stock which probably has very limited downside. If the market corrects, there's money going out by FIs, there could be some outflows also. But otherwise, on a fundamental basis, you could see a 20-25% kind of an upside given the commentary, given the setup. So makes great sense to buy it at this time.
All right, looking good. Tata Motors here on post the management commentary, but another Tata stock, so to say, that Trent. That stock, was very fancied by the retail HNI investors, but earnings did not really match up with elevated expectations, right? And it has seen quite a bit of a sell-off post the second quarter earnings. What does one do? Should one use this opportunity to get in, or would you say that it does not really offer any kind of valuation comfort after the stellar up move that the stock has seen?
Yeah, so the selling that probably has missed out the peaks at those closer to 8,000 levels is probably going to continue to sell because the P multiples continue to remain very elevated. So while there is anticipation that the next year earnings growth could be almost 50% plus, which means your PE might contract if everything remains the same, you still are paying top dollar for a business which is very competitive. And remember, Reliance Retail has just started flexing its muscles in terms of the same segment that Trent, particularly Zudio straddles. And Trent will have to also look at getting beyond the Zudio growth story. I mean, you'll have to see them focus on Star Bazaar, some more of West Side, and of course, let's see how the LGD, the lab-grown diamond business takes off. So there are lots of vectors that need to kind of get firmed up till it kind of gets into that growth trajectory of a short 50% plus. But till then, I think profit booking will continue to happen. Every time there's a little bit of a panic shake off in the market, you'll probably see people booking out because everybody's sitting on very decent profits.
Right, that's true. People have made significant profits on Trent, but the Asian Paints is the other one. That stock is reeling under pressure. Seeing red and 9% kind of a loss as I look at the screen right now. Significant miss volume growth. That has been particularly shocking. Right, expectations were 5 to 6% growth, and it has seen a degrowth of 0.5%. So does this once again reaffirm the trend of a slowdown in urban consumption, or would you say that the weak demand was due to extended rain and floods that impacted Q2? And how are things really looking for the paint sector in particular, with Grasim also or Aditya Birla Group rather entering the fray?
Yeah, so this is a bit of a tricky situation because from a sector perspective, the headwinds are very strong. the consumption per capita in India is nowhere near the global benchmarks, and even for emerging markets, we are way behind. Which means there's enough headroom for growth for the sector, for the industry as a whole. What's hurt Asian Paints is probably, they anticipated the Birla Opus launch, and in anticipation, there were a lot of things that were done on the distribution side to make themselves competitive. They could not take a price cut, obviously, but there are other ways and means that they would have tried making themselves relevant to the competition, to the distributor, to the buyers. And from that perspective, there's a one-off hit that they've finally taken, digested in this quarterly earnings. My sense is that demand has impacted everybody. There's nothing that only Asian Paints got impacted. Of course, it has a slightly better urban mix in that sense, or the stronger urban mix, which has impacted it. But the extended monsoon, the lesser number of days where really things took off. But look at where construction industry is. Look at where the real estate growth is. If all that is in place, and remember, Asian Paints very soon will not just be a decorative coating company business. It's going to be a lot of other things in terms of home appliances, kitchen appliances, all of that. So my sense is it has the resilience to bounce back. This probably is a bottoming out phase where all of the bad news that was to come has finally come. The bad news came earlier. The numbers have reflected that now. At this level, I think it makes sense for a lot of investors. And wherever there's institutional buying that comes into the market, these are places that money gets allocated very liberally. So I would believe it would not be available at these levels for too long, though there are a lot of downgrades bringing the price targets to 24, 2200 or whatever whereabouts. But I think it's for long-term investors, it's time to nibble into the stock at these levels.
All right, point taken. Any other such opportunities that could be nibbled into at the current juncture, given the fact that, of course, we are witnessing a correction after rallying quite a bit after hitting fresh highs. So would you view this as an opportunity to get into certain pockets, and which pockets would those be?
So, my personal view is that last year, throughout the calendar 24, if you see till October end, we got dips, but the dips were very short-lived. So it's been extremely difficult for people to buy into this because people take time, the FOMO keeps building up. But going forward the next few months, you'll probably have a fairly longish period of phase of consolidation where you will get entry points which are very attractive. To buy into companies, the simple mantra is buy into businesses which are India specific, not getting impacted globally by changes that are happening, the shifts that are happening in terms of the tariffs, in terms of currency changes. My focus is largely on domestic consumption and companies which have salience. So there's one company called Nalco, for instance. Very well-known company, government-owned, has a very resilient track record. Now, because it sits on a huge reserve of alumina, which is in such dire shortage globally, and China doesn't have the supplies that it would need. If China were to respond to any kind of a thing through a stimulus where they want to rev up their machine, I don't see any reason why aluminium will not participate in that. It's globally also it's been very strong as a commodity. So I would believe Nalco at these levels becomes very resilient. It probably have limited downside of 5-10%, but an upside which could be significantly large for a company that's almost 45,000 crores market cap.
All right, that's the view then. But I'm afraid we are out of time on this show. Prakash, would like to thank you for taking out this time and joining in and sharing your thoughts with us. Always a pleasure chatting with you. Look forward to connecting again sometime soon.
Yeah, sure. Thank you.
Well, with that, of course, just take a look at the market. Just about 15, 16 odd points down. In 24,130 is where we are at. So looking to break into the green, haven't really been able to do so just yet. But let's see whether or not we manage to break into the green again or not, because we've come off significantly from the day's low. And of course, the Nifty Bank Index as well managed to come back into the green, albeit briefly, but just about around that 51,500 mark as we speak. In terms of some of the individual movers, you can see stocks like Tata Motors, holding the fort, 2.5% uptick on the back of optimistic management commentary. Power Grid, Maruti, HCL Tech, TCS, Britannia as well ahead of earnings, Infosys. So all these tech names continue to do well. Some of the auto names are also providing support on the downside. The likes of Tata Motors, as I already mentioned, but even Eicher Motors, Bajaj Auto participating, and SBI as well in the green. But what's not doing well is Asian Paints, 9% cut coming in on that stock on the back of a disappointing second quarter show. You have Adani Ports, BPCL, ONGC, Coal India. These are some of the other names that are not doing well. Metals as a pocket, under pressure, and which is why we are seeing some of these metal names feature on the list of losers on the Nifty 50. But of course, with that, we are completely timed out on this edition of Opening Bell. Just about looking to get back into the green. In fact, the Sensex has, edged back into the green, and so has the Nifty, 24,150 on the screens. Well, with that, thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. Thanks a lot for watching.